What should investors do? Do you have any advice for investors?
Step one, don't expect wise people to solve this problem for everyone.
Okay.
Think about what you can do for your own situation. The most powerful process in place right now is the degradation of the dollar. What do you do if you think the dollar is going down the tubes? Real assets. Gold in particular.
Buy gold?
Gold in particular.
Nobody's going to have the courage to go and put all their money in gold, but say they have maybe 5 to 10% of their holdings in gold.
Well, in normal times, 5 to 10% in gold would make sense, but these are not normal times.
I've got you.
I mean, the writing is on the wall for the dollar. The government is, in a sense, depreciating its trademark
Right.
in order to try to deal with the problem that's
I
right
like
in
that
front of
line,
it.
depreciating its trademark. Gold is going to spike and the dollar is going to decline. How does this period compare with the last peak in gold, which was 1980, when we had double-digit inflation still then? I think it peaked at around 850 or something like that.
In 1980, gold did peak at 850. It was there for about 15 minutes. If you adjust for inflation since then, that would put the price of gold at about $2,400 an ounce.
Right, but that was I mean, going to 850 was like because people were crazed.
Well, it happened.
Yeah, okay.
It happened
okay.
in the circumstance.
Yeah.
So adjusting from the peak to today for the intervening inflation gets you to about $2,400 an ounce. Next step in the analysis is look at today versus the circumstances in 1980. Inflation got to 14% in 1980. Short-term interest rates were even higher than that. Now, what lies ahead for us in terms of rates of inflation? Given what's happened in the growth in the monetary base, I expect much higher inflation.
Gold's a small market. There's gold you can buy outright, gold bars. You can buy these ETFs that own the gold bars. I think it's GLD, I think.
GLD.
GLD, right? What does that stand for again?
Gold.
Gold, right. That's an ETF, a big ETF. And then there are a lot of gold mining shares. What would you do? Some of all?
That's not a bad approach, but you got to start somewhere.
Yeah.
And for most individual investors, the convenient, simple way is the ETF, which is GLD.
Right.
You can get, if you have an account with a stockbroker, it's very simple to buy shares of GLD.
If we have 5% loss in the economy going into like the first half of 2009, gold could tumble from 760 to where? No.
Of course, it can go down some more.
Yeah.
There are not many speculators left, not many leveraged positions left in gold.
Right, they're out.
So that's makes you a little more sanguine about gold than about stocks on the downside. But if you buy it today and stick it away, you're going to be very happy you did a year, 2 years, 3 years from now.